Happy 2025, everyone. I hope you all had a fantastic summer break and ready for an exciting new year ahead. Bring on 2025, I say. I'm Stephen Garay from First National Connect, a 12 times RMA award winner, and I welcome you to my Sydney market update for February 2025. Last month, three of the eight capital cities recorded a decline in home values, with Melbourne recording the sharpest decline at minus 0.6%, followed by the ACT at minus 0.5% and Sydney at minus 0.4%. Not an ideal start to 2025, but pretty much expected due to the negative growth trend in Sydney home values evident in the last quarter of 2024. So, what factor is allowing this downward trend in the growth rate of Sydney home values to continue into the first month of 2025? Well, nothing new really. A continuing rebalancing of available supply. Capital city listings are tracking 7.7% higher than a year ago, and some markets are seeing advertised stock levels well above the 5-year average for this time of the year. And these include Sydney, Melbourne, Hobart, and the ACT. So we're going to continue seeing this rebalancing of available supply and related negative growth rates in home values for the rest of 2025? Or could we be heading for a shallow downturn only over the coming months? Well, following a lower than expected core inflation outcome for the December quarter, financial markets are pricing in a 95% chance that the cash rate will be cut by a quarter of 8% on February the 18th this year when the RBA next meets. Additionally, more forecasts are factoring in, or should I say most forecasts are factoring in 3 to 4 25 basis point cuts from the RBA this year, implying that by year's end, the cash rate would be at 3.35% to 3.6%, still well above the pre-COVID decade average of 2.55%. Therefore, with the first rate cut likely to be imminent alongside improving consumer sentiment, we could see some renewed support for housing prices over the coming months. Lower mortgage rates and a subsequent lift in borrowing capacity, as well as undersupply of newly built housing, could be the setting of the foundation for a relatively shallow housing downturn, said CoreLogic's research director Tim Lawless. So, 2025 really will be an interesting year in the property market, with a somewhat positive outlook if rates do fall. And they sound like they're going to fall. So interesting times ahead, definitely. So what is my professional advice for Sydney homeowners for 2025? Well, Sydney homeowners, sell now before more properties hit the market. Everybody's going to be watching the news. Everybody's expecting this drop. So people are going to be putting their properties on the market. And for Sydney home buyers, buy now before house prices go up. Well, inevitably, when interest rates go down, you spend more, you get to spend more money, and then obviously prices then follow up. I'm Stephen Garay from First National Connect, a 12 times RMA award winner, and thank you for tuning into my Sydney market update for February 2025, and I look forward to speaking with you next month. If you've got any questions, if you're thinking about selling, thinking about buying, please contact me. Otherwise, I thank you and take care.